Right, hi everyone. Welcome to today's webinar brought to you by IC Markets, where today we'll be covering the live analysis session. Right, for those who may have missed this morning's pre-market analysis, I'm just dropping the link here in the live chat box. Right, here we go. All right, so do take note, this is the link for the pre-market analysis that was done earlier today. In that session, we covered uh, an overview of the markets, the currencies, dollar index, and gold on the daily time frame to give us a more top-down approach or an eagle-eye view of where the markets could currently trade. All right, so do take note of that. So here's the link. Here's the link for that session. All right, so today we're going to cover the live analysis session, and we'll focus our analysis on the 4-hour time frame. All right, okay, great. Let's get get things going. All right, so before we start, do take note of the disclaimer. This is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Do take note of the risk warning when it comes to trading Forex and CFDs, as they carry a high level of risk to your capital and you should only trade with money you can afford to lose. Right? Okay. My name is Ketan. I'm an investment analyst here at Everest Fortune Group. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so just a simple agenda for today. Right, we'll quickly go through the key economic events that are coming up this week. We've got two monetary policy statements, and we've got the NFPs as well. There's a whole bunch of other data that's coming out this week as well, but these are the I would say these are the three events that are going to stand out. Of course, we've got FOMC meeting on 31st January, followed by the Bank of England on the 1st of February, and we have the highly anticipated non-farm payrolls on the 2nd of February. All right, so here's the calendar for this week. So I'm on GMT time here. So we've got, as I said, we've got a whole bunch of data coming out this week. We've also got retail sales in Australia, JOLTS job openings in the US, inflation data in Australia again, Chinese manufacturing PMI, German preliminary data, ADP data, Canadian GDP, and of course then on Wednesday, 31st January, we've got the FOMC press statement and press conference coming up at 7 p.m. and 7:30 p.m. Respectively. Do take note, I'm on GMT time here. All right, then on Thursday, 1st of February, we've also got manufacturing PMI again and inflation data out of Europe. Plus, we've got the Bank of England releasing its monetary policy report as well. Right, as you can see, right, okay, sorry, that's on 1st of February. And then we round up the week with the employment report from the US. So we've got non-farm employment change, NFPs, and the unemployment rate plus average hourly earnings as well. Okay, so we'll just start off with the Fed, of course. The Fed has kept its Fed funds rate at 5.25 to 5.5%. So the upper bound is set at 5.5%, right? So with inflation retreating quite steadily, right? On the left, I have the chart for headline CPI. On the right, I have the chart for the core CPI. We can see that they both peaked in middle of 2022, roughly, right? At the end of the second quarter for 2022 for headline CPI, and core CPI peaked in the third quarter of 2022, and both have proceeded to retreat quite sharply, right? So we can see the rate of change for inflation for the headline CPI and core CPI have trended lower, so which is good, right? So when we see the rate of change for inflation heading lower, it means that the impact of higher interest rates or Fed funds rates is having an impact on consumer spending and business expansion and so on and so forth. Right, so if you look at PCE inflation, this is the PCE price index. This is the Federal Reserve's preferred measure of inflation. Similarly, you can see that the headline PCE, which is on the left, and the core PCE on the right have both trended lower quite significantly over the past 12 months. right? And just to take note, although inflation has retreated quite sharply, but it's still well above the Fed's target of 2%, right? So you can see here, current CPI is at 3.4% with the core at 3.9, both well above 2%. Similarly, for the PCE price indices, the headline is at 2.6 and the core is at 2.9, somewhat closer to the target of 2%, but still probably not well anchored yet. Okay, then coming up to employment, you can see the unemployment rate on the right has roughly ranged between 3.4 to 3.7% over the last 12 months or so. NFP non-farm change came in pretty low in October and is starting to and showed better growth in November and December. Right, so at this point, it's quite expected to see not significant growth in non-farm payrolls. Right, the labor market is quite saturated by this point where we are in the cycle. So it shouldn't be too surprising to see non-farm payrolls gradually start to ease as well, right? We may not see such strong monthly gains coming in month after month at this point onwards, right? So this is the table for non-farm payrolls over the last 12 months. So as you can see, the figures that are in red right here, for example, when I'm pointing with the figures in red, that means that the non-farm payroll for that month, which is June, came in lower than the estimate, right? So you can see out of the last 1, 2, 3, 4, 5, 6, 7 months, we've had 1, 2, 3, 4 months where the NFPs have missed their original estimates, right? So when we have the NFP number missing its estimate, it sort of indicates to us that um, the labor market in the US is not growing as strongly as it previously was, and we may see some slowdown in hiring beginning to take place, right? So as you can see, out of the last 7 months, we've had 4 months where the NFPs have missed its respective estimate, right? So should the NFP numbers for January, which will be released this Friday, show job hiring slowing down or job gains slowing down, then this could potentially function as a bearish catalyst for the US dollar, right? But because we see economic activity in the US is still strong, right? On the left, we have GDP growth on a quarterly basis, and we have composite PMI activity on the right. So you can see economic activity is still relatively robust in the US, and because of that, and with the labor market being relatively strong or resilient, it's quite likely the Fed is going to keep interest rates on hold. They're definitely not going to cut at this month's meeting for sure. They're definitely not going to cut the interest rates anytime soon. They're very highly expected to maintain the Fed funds rate at 5.5%, and they may come out with a relatively hawkish statement as well. Although inflation is heading down, trending down in the right direction, it is still quite well away from the target of 2%. So that is why we may see potentially a relatively hawkish statement as well as a hawkish press conference by Chairman Jerome Powell on this day. All right, then moving on to the UK. Similarly, the UK, the Bank of England has kept its official cash rate at 5.25%. Similarly, like the Fed, it is expected to keep its official cash rate on hold again. But however, when we look at CPI data in the UK, we can see that although the trend is to the downside, however, you can see clearly that the headline CPI of 4% and the core CPI of 5.1% are also well above the BOE's target of 2%, right? So there's still a lot more work to be done to bring inflation down back to the target of 2%. So although the Bank of England may not raise interest rates, they could come out with a pretty hawkish statement as well. So it just depends. And just one thing to take note of, because we've got the Bank of England releasing its monetary policy statement the next day after the Fed, should markets interpret the Federal Reserve statement and press conference as being more hawkish than the Bank of England's, then we can probably expect that the pound to sell off quite strongly, right? So if you get an outcome where markets have inferred the Fed to be more hawkish than the BOE, then we're likely to see the pound dollar sell off quite strongly, right? This is a potential scenario that could take out. and that could take place, right? When we look at UK GDP and PMI, UK GDP has been pretty anemic, right? Whereas PMI activity has picked up in the last 3 months, so somewhat of a mixed uh, result of mixed economic activity, mixed growth in the UK, right? So do take note, the Bank of England once again is likely to keep interest rates, its official cash rate on hold at 5.25%, but because inflation is still well away from its target of 2%, we may see a relatively hawkish statement um, by them. All right, now let's dive into the charts onto TradingView, and just we'll start off with the dollar index, and we'll start our analysis on the 4-hour time frame. All right, if there's any questions that you may have, please do not hesitate to drop them in the live chat box, and also drop any requests that you may have for any analysis for any of the currency pairs, commodities, or indices. So basically, I'll start off with the dollar index, right? Because that's important. We all need to know how this instrument is trading so that we know how it can translate to all the other FX pairs. Then also we'll look at the commodities, we'll look at gold and WTI oil, and also we can cover the indices as well. All right, and do take note, do not hesitate to drop your request in the chat box at any point during this webinar. All right, okay, so I'm on the 4-hour time frame for the dollar index, right? As you can see, this price zone between 103.65 and about 103.80 has acted as a pretty decent resistance zone for price since 17th of January, right? So this is this zone here, I've identified it as a pullback resistance level, right? We can see quite clearly since 17th of Jan, price has failed to convincingly break above 103.75. Right, so that's how we've identified the first resistance here. Right, we can see price. Oh, let me get my brush. Hang on. Okay, price running into resistance here on 17th of Jan, then again on the 23rd of Jan, and just as recently as last Friday, 26th of Jan. Right, so you can see multiple instances where price has reacted off this level, which tells us that this is indeed a strong or significant pullback resistance level. So 103.73 is the first major resistance zone for the dollar index. Right, when we look slightly higher up, where the second resistance is at 104.26, we do see a pretty um, decent swing high resistance or pullback resistance as well, right? If I were to extend it here, you can see that this zone here, price ran into resistance here on 6th of December, then once more on the 11th of December before dropping lower. So clearly we can see that this zone here at about 104.20 is the next major resistance zone for price. So that's how we've identified the second resistance at 104.26. Right, okay, moving lower, where could the support levels be? Well, if we look at this price level here at 103.04, we see price finding decent support on 23rd of January, last Tuesday, 24th of 24th of Jan as well. Although we can see the wick, of course, going well below this level at 103.05, but you can see that based on the 4-hour candle, price has failed to close convincingly below this level. So that is why I'm not that's why I identified this level as an intermediate support, hence the dotted green line, rather than an outright first support, right? So I do feel that this level here could offer a little bit of support for price should it drop towards this level, but I'm not very convinced by it. Hence, I would just like to identify it as the first support, uh, as the intermediate support. All right, okay, then with regards to the first major support is identified as a zone from 102.60 to 102.72, right? Similarly, we can see from 3rd of Jan till 15th of Jan, price failing to break above this level. So this level was functioning as a pullback resistance in the past, which now could potentially function as a pullback support, right? And this level here also aligns quite well with the Fibonacci retracement. You can see here we started this retracement from here on 28th of December, and we've ended it up here on the 23rd of Jan, right? We can see that the 38.2% Fibonacci retracement aligns quite well with where the pullback support at 102.72 has been identified. So this gives us the first major support zone for the dollar index. Moving a bit lower, similarly at the price level of 102.10, we see price making decent support here as well, right? We can see price bouncing off this level on 5th of Jan, 8th of Jan, 9th of Jan, and as well 12th of Jan before going higher, right? So clearly this is a very significant pullback support level, which is what we're using to identify the second support at 102.09. And when we use the Fibonacci retracement, we can also see that price has bounced off the 50% Fibonacci retracement as well. So once again, we have a pretty significant support zone where for the dollar index, and between 102.20 and about 102.08, right? So this is the second major support zone for the dollar index, right? So with the FOMC coming up this week, right, we may see stronger demand for the US dollar, especially if the FOMC statement and Chairman Jerome Powell both come out very hawkish during their respective news releases, right? So do take note that we could have a potential strong demand for the US dollar on 31st of January, or perhaps even going into the meeting before the statement is released, we may see stronger demand for the dollar as well. And what could potentially drive the dollar index above this first resistance zone would be a combination of a hawkish statement by the Federal Reserve, as well as Chairman Jerome Powell communicating a very tough stance with regards to keeping interest rates higher, right? So do take note how his press conference could have a major impact on the demand for or the strength of demand for the US dollar, right? So if we do get that very hawkish outcome from the first meeting, from the first FOMC meeting of this year, then it's quite likely we're going to see the dollar index quite easily break above this first major resistance zone. All right, okay, so this is what we have for the dollar index, and also we can clearly see since the end of December, it has been in a strong uptrend as well. Of course, there's been pullbacks along the way. Also consolidation, we can see price roughly consolidated between 102.10 and 102.74 in like the first 1.5 weeks of January. Then it broke higher. Then similarly, it's sort of ranging again now from 18th of Jan till now, ranging approximately between 103 and about 103.76, right? So it's sort of range bound trading once more, waiting for the next catalyst to either take it higher or lower, right? So this is what are the key support and resistance levels that we have for the dollar index. All right, let's move on over to the pound, since the Bank of England is the next central bank that's lined up this week right after the Fed. Right, so if you look just quickly, if you look at the dollar index since January, end of December till now, it's been a strong, pretty strong uptrend. However, the pound has shown quite strong resilience over the same period, right? So we can see since end of December till now, the pound is actually ranged between about 1.2620 and approximately 1.2780, right? When you look at the euro, you can see that clearly the euro is in a strong downturn, right? The euro was selling off hard versus the dollar, right? As the dollar gained in strength, the euro sold off quite strongly. However, the pound has actually shown strong resilience, right? So do take note, the pound is definitely one of the stronger currencies out there versus the dollar when you compare against its peers, right? Okay, so with that, where are the major support and resistance levels? Right, okay, so when we look over here, let me just zoom in a little bit so it's a bit more clearer. So you can see since 21st of December till now, we can see that price for the, well, we can see the pound is approximately range between 1.2610 and about 1.2800, right? So when we can see where the major support and resistance levels lie, and we can also see that this the market structure is clearly showing to us sideways trading, right, or range bound trading. This gives us an opportunity to play the ranges as well, right? So as price comes towards the major support, or the first major support and the second major support, it identifies to us that potentially there could be an opportunity for bullish reversal. Similarly, when price approaches the first resistance and the second resistance levels, it potentially signals to us that there is, or it signals to us there's a potential bearish reversal on hand, right? So this is how we can, that's why it's important to identify the market structure, whether in a bullish uptrend, bearish downtrend, or whether do we have sideways trading, so that we are able to identify uh, trading opportunities that have higher probability than perhaps something else, right? So if you had assumed that you were very bullish on the pound, but clearly you can see the price is uh, trading sideways, not going long at the wrong time would probably not yield a profitable trade, right? So this is what is important, to identify the correct market structure at that point in time, which is what we're seeing for the pound now, sideways trading. So do take note, should price drop towards the first support or second support, these two levels are potentially highlighting bullish reversals. Whereas should price rise up towards the first and second resistance zones, then it could typically highlight, or potentially highlight, bearish reversal points. Okay, so we can see price making a strong pullback resistance here last Friday, 26th of January, right? So that's how we've identified the first resistance for the pound at 1.2748. This is also a level that aligns quite well with the 78.6% Fibonacci retracement. Right, so I'll show you how we got this retracement, right? So this retracement started from here, this high on the 24th of Jan, ending with the low here on the 26th, right? So you can see the 78.6% Fibonacci retracement aligns quite well with this pullback resistance here. Similarly, for the second resistance, we see price making a very strong, you can even argue that this is a pretty strong swing high resistance here, right? Price running into resistance at 1.2780 before proceeding to drop lower, right? You can even see the market structure shows that this is, we can identify this type of market structure as a swing high resistance as well. All right, so that's how we've identified the second resistance at 1.2781. Okay, now moving on to the support. We've got 1.2690 as an intermediate support. Why is that the case? Because we see price bouncing on this level on the 25th of Jan and 28th of Jan, and also price falling slightly below this level here on the 26th before reversing to go higher. So I can see that this level here does offer some pretty decent support for price, but it's not the most convincing support level. Hence, I'm identifying it as the intermediate support, right? Intermediate support for the pound is at 1.2690. Where I do see really strong support is this pullback support level here at 1.2650. And we can clearly see price bouncing off this level on 17th of Jan, 18th of Jan, and 23rd of Jan to go higher, right? Clearly each time price has found strong support at this level and reversed to go higher. So that is why I'm using the level of 1.2650 to identify my first resistance, which is a significant pullback support level. Similarly, when we look at 1.2609, we can see price making a very significant swing low bounce here. Right, price making a very significant, oops, where's my brush? All right, here we go. Price making a very significant swing low bounce of this level here on 3rd of Jan. Then again on the 5th of Jan. And once more, another strong swing low bounce on the 17th of Jan, right? So once again, you can see multiple times where price has reacted off 1.2609 to bounce higher very convincingly. So this tells us that this is a very strong support level, and I would identify this as a multi-swing low support level. So do take note, 1.2609 is indeed a very strong support level for the pound. All right, so let's just assume that we get a very let's just fast forward to Thursday, 1st of February, where we've already seen the FOMC statement and press conference, as well as the Bank of England's monetary policy report. And let's just say if markets have inferred the Fed to be much more hawkish than the Bank of England, then of course we're going to see the pound fall very sharply, right? So It's quite likely it could break through the intermediate support could be broken before that, but it's quite likely price is going to break through the first support as well. So should we see price break through the first support for the pound uh, 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 in the second half of this week, where we can potentially look to target or identify a potential take profit for your target for your bearish position would be at around the second support, right? So basically between at around 1.2600 is where you should be identifying take profit opportunities should we see the pound fall strongly in the second half of this week, right? And of course, similarly, if we do see uh, the markets have inferred the Bank of England to be more hawkish than the Fed, then of course we are likely to see the opposite occur. So that means we could see the pound rise strongly, and we may see it break through the first resistance, and then where you can identify a potential take profit on the long side would be the second resistance here. So at about 1.2780 would be a good area or zone to identify as a potential take profit level. All right. Okay. With that, let's move on to the euro, right? And then after that, we'll cover gold and oil. And of course, if there's any other requests that you may have, then we'll cover the indices as well. All right. So as I mentioned a little bit earlier, right, when we look at the dollar index, right, we can see a very strong uptrend since the beginning of this year. And of course, if the dollar is rising strongly or demand for the dollar is stronger, then of course we're going to likely to see the euro dollar fall strongly as what we've clearly seen over this period. Hi Amir. All right, sure. We'll cover Swiss franc yen and dollar franc as well. All right, okay. We'll cover franc yen and dollar franc after this. All right, sure. That's once we cover the euro, we'll get on to those. All right, great. Great to see the requests come in. All right, okay. So for the euro, we do see a very strong support level here. Uh, this is at 1.0813, right? You can see previously price, this level acted as a pullback resistance back on 7th of December, 12th of December. And once price broke above it, this level could then potentially function as a pullback support, which is what we have seen quite clearly on last Friday, 26th of January. You could even argue here on 23rd of Jan and 25th of Jan, price did find support just above this level before reversing to move higher. So this tells us that this is a pretty significant overlap support level at 1.0813, which also aligns very well with the 78.6% Fibonacci retracement. So we started this retracement here 8th of December going up to this high on the 28th of December. So that's how we found the 78.6% Fibonacci retracement. All right, moving a little bit lower, right, we can see that this is a very significant swing low, right, that occurred on 8th of December and 11th of December. You can even argue that this was a double bottom here before price bounced higher. So clearly this is a very strong support zone for price, and hence we've identified the second support at 1.0743, which is this swing low support here. All right, so if you do get uh, a stronger demand for the US dollar following the FOMC meeting, do take note if the first support gets taken out at 1.0813, where we should be looking to identify potential take profit opportunities for the euro would be around the area of where the second support is. All right, also within the vicinity of 1.0750 is where we should be targeting potential take profit levels should the first support be broken, right? Especially when we have if we have a scenario where the Fed comes out to be uber hawkish, causing stronger demand for the dollar, and hence we could see the euro break this first support and drop all the way down towards the second, right? Okay, we can also see, I think there's a pretty decent descending trend line as well. Okay, not too bad. It's not the best descending trend line. There's only one or two touches. Okay, that's fine. But generally, we can see that the trend for the euro is to the downside, right? It fell sharply in the beginning of January, then consolidated uh, for the next week or so before dropping sharply again, and it has proceeded to consolidate once more from the 17th of January, right? So 17th of January till now, roughly price has been consolidating within these two levels. All right, so we've identified the first and second support. Let's look at the resistance. Right, so if you look across at this price level here at 1.0925, right, we see price reacting on this level several times. Right, you can see price bouncing on this level here on 9th of Jan, 11th of Jan, and then when price broke underneath it, it found strong resistance here on the 24th of Jan as well. So we can see several times where price has reacted off this level as a support and resistance, which tells us that this is indeed a pretty significant overlap level, right? So that's how we've identified the first resistance at 1.0925. And when we use the Fibonacci retracement, we started this retracement from here, the high of 28 December and ending with the low here on the 26th. We can also see that the 38.2% Fibonacci retracement aligns quite close to where the first resistance is. As you can see, price has bounced off this first resistance in the past. We bounced off this level here at 1.0937 in the past, which highlights to us that potentially this is a strong resistance zone. All right, then moving a little bit higher up, when we look across this price level here at 1.1006, once again, we see price reacting off this level several times, right? Price making a very significant swing high resistance here on 28th of November, another significant swing high resistance on the 14th, running into resistance and support in 22nd December. And then you can even argue here on 5th Jan finding resistance, and of course here on the 11th of Jan finding resistance once more. So clearly we can see price has reacted off this level several times, be it as a resistance, support and resistance, which tells us that this is a pretty significant overlap level, which is why we have identified it as the second resistance. And also when we use the Fibonacci retracement at 61.8%, we do see this level aligned quite well with the second resistance itself. All right, so these are the key support and resistance levels for the euro. All right, let's move on to dollar franc, and then we'll cover franc yen as well. Okay, let me just zoom in a little bit. All right, okay, so we're going to start off with dollar franc. Right, since demand for the dollar has been stronger this year, right, since the beginning of this year, then it's quite expected to see the dollar franc move higher as well, right? So the dollar franc has gained quite significantly over the first 3 weeks of January, but it's run into major resistance here at about 87.30, pulled back to about 86.10 on 24th of Jan, tried to regain the bullish momentum, but it has failed at about 86.75 and dropped lower once more to find support today once more at 86.03. So we can see clearly where the major resistance and support levels are. So if we look at support first at 86.07, right, we can see price finding decent support here as it fell quite sharply on 19th of December, finding decent support before going lower. And then similarly here, it found strong support on 24th of Jan and looks to have found strong support once more today as well. So this level does look like a pretty significant pullback support level here, which is why we've identified it as the first support, which is at 86.07. Right, moving a little lower, when we see price at 85.74, we do see another pretty decent pullback support level, right? Price finding resistance here on 26 December, finding resistance here on 5th of Jan, and also you can argue on 11th of Jan, price finding resistance here once more. So this level here was previously functioning as a pullback resistance level. Now of course when price breaks above it and proceeds to drop lower, this level could then potentially function as a pullback support. So that's why we've identified 85.74 as the second support, and we also have the 38.2% Fibonacci retracement aligning very well with this support level here, right? So this retracement was found by starting from this swing low here on 28th of December, ending with the swing high here on the 23rd of Jan, right? So these are the key support levels for pound franc, and because we've seen it bounce off this level here, maybe there is a potential bullish opportunity for the pound. So for dollar franc. right? So you could potentially, if price manages to stay above this first support here, right, there's a potential opportunity to go long on dollar franc, and where you would put your stop loss would probably be about 15 to 20 pips just underneath the first support, right? We need a little bit of breathing space, so we're not going to put our stop loss at exactly uh we're not going to put our stop loss at exactly the first support, probably about 15 to 20 pips underneath it. So that would mean about maybe 85.90 perhaps, right? 85.90 is where you could identify a potential stop loss level, and a potential entry would be around the first support itself. So around like 86.10, you could potentially identify a long opportunity should price reverse and bounce higher. And then of course, where we could potentially identify the take profit zone would be around the first resistance. So probably around the level of 86.70 is where we can target the take profit. Alright, so do take note of that. First resistance here at 86.75. You can see price making a pretty significant pullback resistance here on 25th of Jan, right, before dropping lower. Probably just highlight this as a zone. Right, is there, what do we have here? Alright. Okay, we also have a Fibonacci projection. Fibonacci projection uses 3 points, 1, 2, 3. It helps us to identify how price, where price could potentially end up. So as price reversed off this level here on 26th of Jan and proceeded to drop lower, we can see that the 100% Fibonacci projection also aligns quite well with this pullback support at 85.74. Right, so we have a confluence of Fibonacci levels around this support zone. So confluence of Fibonacci or Fibonacci confluence simply means there's more than one Fibonacci level at that particular price point or that particular price zone. So we have the 38.2% retracement as well as the 100% projection. Right, so this adds to the significance of this second support. Okay, and of course, when we look a little bit higher up, but second resistance is this pullback resistance level here at 87.10. Right, we can see price uh running into resistance here on 14th of December, then 17th of December, and of course as recently as 23rd of Jan, finding resistance here as well. So you can see multiple instances where price has failed to break above 87.10 convincingly, right? Of course we do see the top of the wicks extending, but like I said, price has failed to break above 87.10 convincingly. Hence this is a major support, a resistance zone for the dollar franc, right? And also when we run the Fibonacci retracement, right, so we started this retracement here from 8th of December going down to the low here on the 28th. We can also see that the 78.6% Fibonacci retracement aligns very well with the second resistance here. So do take note of where the major support and resistance levels are for dollar franc, and should we see price manage to reverse off the first support, right, then where you can potentially target a take profit for the long side or for a potential bullish reversal would be around 86.70 where the first resistance lies. All right, okay, and Amir, we wanted to look at franc yen. Okay, so Swiss franc, Japanese yen. So let's go take a look at that. Okay, let me get rid of this. All right, so similarly for Swiss franc, Japanese yen, or franc yen, we see since 15 December this currency pair exhibiting a strong bullish momentum, right? But it found resistance around 171.50 on 11th of Jan of this year, as well as 17th of Jan, and somewhat has been consolidating between 169.80 and about 171.50 in recent over the last 10 trading days or so, right? So it's important to see that during this phase we had a pretty strong bullish trend. Of course, there were pullbacks along the way, but right now price does seem to be consolidating between these two levels that I mentioned. So first support is quite clear. It's about here at 169.82, and first resistance would be around here. So I'll just highlight. Yep. Where did it go? Oh, sorry. Okay, got it now. Because the first resistance is around 171.55. Right. Okay, so these are the immediate support and resistance levels for franc yen. Let me see, where is, right, okay, I think we can probably do a Fibonacci retracement as well. Let's see, right, we'll start this retracement from here. This swing low on 14th of December, going up to the swing high here on 29th of Jan, or today rather. Let's pull up all the fibs and see what we get. Right, okay, so we can also see that this pullback support level here aligns quite closely to where the 23.6% Fibonacci retracement is. And if you look across this price level here at 168.87, I would identify this level as my second support, right? I see a pretty strong overlap level here, like price running into resistance at 168.87 from 27th of December till 29th before finally breaking higher. And then as price pulled back on 9th of Jan, it found strong support here before reversing to bounce higher. So this does look like a pretty significant overlap level, which is why I'm going to use it to identify it as the second support. Now, with regards to the second resistance, okay, we don't need to keep any of the other Fibonacci retracements, so let's just tidy up the chart and just keep 23%. All right, to the upside, okay, before I get to the second resistance, you can see now since 11th of Jan, price has been ranging between these two levels here, the first resistance and the first support. Should price fail to convincingly break above the first resistance and start to reverse to drop lower, it does present to us a potential bearish reversal, right? So there is a potential short opportunity for the franc yen should it fail to break above this first resistance and then reverse and proceed to drop lower. Okay, so do take note that this is indeed a pretty significant support, resistance zone for the franc yen over the last 10 trading days or so, right? Just take note of that, right? So we could see price reverse off this level and continue to drop lower. Where it could find support, right, would be, there's a pretty decent support zone here, right, between 170.10 and about 169.80, right? So should price thus reverse off this level here, the first resistance, and proceed to drop lower, right? Should price reverse to drop lower, where we can potentially identify a take profit for the short position would be this first support zone between 170.15 and 169.80. Right, okay. Now what about the second resistance, right? I think if you look on the weekly chart, I believe franc yen is at pretty much all-time highs, I believe. Yes, it is indeed. You can see that the Japanese yen has devalued quite significantly versus the Swiss franc. So we are at all-time highs. So now how are we going to identify the second resistance? Okay, first resistance is quite clear, right? I think it's quite easy to identify the first resistance. How about the second, right? Okay, I think we can try and use a Fibonacci extension to help us identify this second resistance level, right? Okay, so to use, identify extension levels, we're going to use the Fibonacci retracement tool, right? So we're going to start this retracement from here, 16th of November, going down to this low, which is the absolute low, yep, to 14th of December. The key extension levels are at 127 and 161%, so let's bring those up. Right, so as you can see here, the next resistance for franc yen could potentially be around 172.84, right? Do take note of that. And of course, should price continue to go higher, then the next resistance would be at around 175.71. Do take note, right? The pound yen, sorry, not pound yen, franc yen is trading at all-time highs, and it has been ranging since the 10th of January between 169.90 and about 171.80. All right, so do take note. This is how we can identify potential resistance levels or zones should we not be able to identify anything from the market structure, especially when you're at all-time highs. It might be a little bit more challenging to identify new resistance levels. One of the ways to do that is by using a Fibonacci extension levels, right? Like how we have done here. Okay, so this is what we have for um, Frank Yen. All right, no worries, Amir. Much appreciated. Okay, we still got time. Okay, let's just dive over to the commodities. Let's start the analysis on gold. Then we'll do WTI, and of course, along the way, if there's any other requests that you may have, please do not hesitate to drop your questions in or the requests in the chat box. All right. Okay. Now, looking at gold. Right. Of course, we all know gold and the dollar has an inverse relationship. So if we see strong demand for the US dollar, right, then typically we're going to see gold prices head south over that same period, which is what we've seen here. All right, so let's zoom in a little bit so we can try and identify how we identify the major support and resistance levels. Okay, so if you look on the support side, right, price making significant swing low bounce of 2004 back last week on 18th of Jan, or yeah, about 10 or 2 weeks ago rather, sorry, 18th of Jan, bouncing quite strongly, and we can quite clearly see this is a significant support level here, price making a very significant swing low bounce. So that's why we are using this level of 2005 as the first support. Right, for the second support, right, we can also see once more price making a very significant swing low bounce here, right? You can even say this is a double bottom, 11th of December, 13th December, before bouncing higher, right? So you can once again see this is a very significant swing low support here. So that's why we've identified this level at 1976.18 as the second support. Right, in addition to that, we've also used a Fibonacci projection here. So this projection started from 12th of Jan, going down to the second point, 17th of Jan, and ending with the third point on 19th of Jan. So what the projection is trying to tell us is potentially price could drop towards the 61.8% Fibonacci projection level, which is also a zone that which is also a level that aligns quite closely to where the first support had been identified. Right, so do take note of that. We've also got a Fibonacci projection here to add to the significance of the first support. First resistance is quite clear, right? We see price uh, failing to break above 2035, right? We see it running the resistance here, 19th of Jan, 23rd of Jan, 24th of Jan, and once again earlier today as well. Right, so you can see multiple instances where price has failed to break above this level, so hence we're using it to identify our first resistance. And when we run the Fibonacci retracement at this level here, we started this retracement from here, 12th of Jan, going down to the low here, 17th of Jan. We do see that this level aligns quite closely to the 61.8% retracement as well. We do see the top of the wick here on 19th of Jan coming as high as the 61.8% Fibonacci retracement, which tells us this is a pretty significant resistance zone. Higher up, we do see price making a significant swing high here on 15th of Jan, running the resistance here on the 5th of Jan as well, and finding pretty decent support at the end of last year, 29th December, and early Jan as well, right? So we can clearly see price reacting off 2060 pretty much several times, which does indicate to us that this is indeed a pretty significant overlap level, which is what we're going to use to identify as the second resistance. And also we've run another Fibonacci retracement starting from here, 27th of December, going down to the low here on the 17th of Jan. We can also see that the 61.8% Fibonacci retracement level aligns quite well with the second resistance as well. So we've got another strong resistance zone for gold prices up here. Right, so should we see demand for the dollar continuing to pick up, then we are quite likely to see, gold prices retreat lower. So do take note, price has failed to break above the first resistance at 2035 since 19th of Jan. Should price reach this level once more, it could offer a potential bearish reversal and an opportunity to go short on gold prices, and where you could target potential take profit zones would probably be around here, from anywhere from 2015 onwards would be probably a good area to start targeting or identifying a take profit level should price reverse off the first resistance zone and drop lower, right? This is what we have for gold. Then let's move on to oil, crude oil. I think we'll wrap up with oil. If there's no further requests, I think we'll just wrap up today's session with the analysis on WTI oil. All right. So if we look across here, okay, all right. I don't have the second resistance. That's fine. We can identify the second resistance together. Okay. So we've seen since the middle of January, crude prices have been in a strong bullish uptrend, right? This is primarily due to the ongoing geopolitical tensions in the Middle East and the Red Sea, right? We see, and some supply disruptions as well in Russia due to the ongoing war, and of course, and also some supply disruptions in the US due to bad weather, right? So a combination of supply disruptions in various parts of the world, geopolitical tensions in the Middle East and Red Sea, and has sort of created a strong bullish has functioned as a pretty strong bullish catalyst for crude prices since the middle of Jan, right? So we do see prices pulling back as we speak for WTI oil. Where it could find support is this overlap level here. I'll just zoom in a bit. This price level here at 76.98 is a pretty decent pullback support, not overlap, pullback support level for price, which also aligns well with the 23.6% Fibonacci retracement. All right, Amir, yeah, sure. We'll cover Euro Pound right after oil. All right, then we'll wrap up with Euro Pound for sure. So we do see this price level here at 76.98 as a potential support level for WTI oil, and we could see price find support here and reverse to move higher, right? So we do see the bullish case for oil at the present moment, right? We do see the bullish case for oil. So if price does indeed pull back towards this level here at 76.98 and reverses off it to go higher, then we can quite convincingly say that the bullish uptrend is still intact. All right, first major support for price is at 76.09, is 76.06. We see price running into strong resistance here on 26th of December, and then after breaking above this level, finding decent support here on 26th of Jan, thus creating a pretty significant overlap level, which is why we've identified it as the first support. And moving a bit lower, second support is this pullback support level here at 74.18, right? Price finding decent support here on 23rd Jan till 24th Jan for a couple of days, and it's also a level that aligns quite close to where the 61.8% Fibonacci retracement is, right? So we've got a relatively strong support zone here as well. All right, to the upside, quite clearly, is going to be the first resistance at 79.39, right? We can see price making not one but two swing highs here, first on 14th of November, then another swing high here on the 30th of November, right? So these are two multi-swing high resistance zones, which is where price does seem to have run into resistance once more or close to it earlier today. Now higher up, where could be the next potential resistance? If we look across this price level here, right, back on 1st of November, 2nd November, and 3rd November, price finding decent support of this level at 80.36, bouncing off this level quite strongly several times. So what was functioning as a pullback support in the past could now potentially function as a pullback resistance. So that's how we've identified the second resistance for WTI oil. All right, let's just wrap up with Euro Pound, and then we'll call it a day. So do take note, these are the key support and resistance levels for WTI oil. All right, let's move on to Euro Pound for the last analysis for today. All right, okay, so you can see since 29th of December, the Euro Pound has been in a strong downturn. That means the demand for the British Pound has been much stronger for the Euro, right? So there's also a pretty strong descending trend line, I believe, right? If I were to look at this, yeah, there's a pretty decent descending trend line here. Right, price has failed to break above this descending trend line several times, which indicates that the bearish momentum or the bearish trend is still intact. We see a series of lower highs and a series of lower lows, which tells us that this is indeed a strong bearish downturn. Right, we can see price breaking underneath the first support today. So of course, naturally, the second support is now going to function as our first support, right? As support levels and resistance levels get taken out. What about the first resistance now? First resistance probably be around here. Right, why is that the case? Price bouncing off this level here on 5th of September, and then price finding decent support here on 26th of Jan. So this was functioning as a pullback support in the past. So now 85.27 could potentially function as a pullback resistance. Okay, first resistance is now the original first resistance is going to become a second resistance, and we'll get rid of this line here at 85.88. So do take note, these are the more significant resistance levels for the euro pound. Price is dropping quite sharply today as well. So should we see price pulling back or retracing higher, it may offer us a decent opportunity to re-enter the short trade again. So should price retrace higher, maybe come towards the first resistance, or perhaps even just underneath the descending trend line, it could help us identify a potential bearish reversal for the euro pound. Okay, first support is this strong swing low that occurred here on 22nd of August, which is also a level that aligns quite close to where the 127.2% Fibonacci extension lies. So how did we find this extension level? We use the Fibonacci retracement starting from here, 11th of December, and ending with the high here on the 28th of December. We can see the 127% Fibonacci extension aligns quite close to where the strong support zone is. Let's just see where the 161 is, because we are probably going to need that to identify the second support. Or is that way too far? Okay, this is just simply way too far. That doesn't make sense. Second support, okay, then I would use this here. Second support, we see price making a very significant swing low here on 11th of July as well. So I'm going to use this level to help us identify the second support for euro pound, and I'll get rid of this. So the 127.2% Fibonacci extension adds significance to the second support here at 85.04. So do take note, the bias for euro pound is to the downside. It's quite likely it's going to fall further. Should price break below the first support at 85.14, it could trigger a potential bearish breakout, and should that bearish breakout take place, then we can potentially target the second support 85.05 as a potential take profit zone. All right, okay. Right, thanks everyone for tuning in today. All right, I mean, hope you've had you found the analysis for franc yen, dollar franc, and euro pound to be useful for you today. Do take note, we've got two major central banks coming up this week. We've got the Federal Reserve. Let me go back to my charts. We've got the Federal Reserve on January 31st. I'm on GMT time. Do take note, the FOMC statement drops at 7 p.m. GMT time, and then followed by Chairman Jerome Powell delivering his press conference at 7:30 p.m. If both of these events are hawkish, we're definitely going to see stronger demand for the US dollar. Then moving on to 1st of February, Thursday, at 12 p.m. GMT time, the Bank of England will release its monetary policy report. And if we get an outcome where the market infers the Fed to be more hawkish than the Bank of England, then this could potentially cause the pound dollar to fall quite strongly. And we wrap up the week with non-farm payrolls on Friday, 2nd of February, 1:30 p.m. Right, this is definitely going to have a major impact on the demand for the US dollar, and it's definitely going to create extreme volatility over this period. All right, do take note of all these events coming up, and wish you all the best in your trading journey for this week, and do look out for all upcoming webinars by IC Markets for the rest of the week as well. And we just wrap up with the ending disclaimer. All right, so do take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. All right, thanks everyone for tuning in. Hope this has been a great session, and I'll catch you guys at the next webinar. All right, take care and have a great trading week. Thank you.